Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. We have this just in. The Philippine peso opens today at 59.38 against the US dollar. The all-time low was at 59.35 recorded on January 7th. The Philippines and the United Arab Emirates signed a free trade agreement aimed to expand trade and investment ties. And the Budget Department cuts its infrastructure spending target to 4.3% of GDP this year. We begin with this developing story on the Philippine peso opening today at 59.38 against the US dollar. And we're seeing a fresh intraday low. We're now speaking to Mike Ricafort, the chief economist of RCBC. It's good to have you, Mike. You've been watching the peso since a couple of minutes back there. What's going on now? What are the levels?
Well, now Cathy is at 59.42. It reached an intraday high of 59.425. That's a new intraday high record as of this morning. So compared to yesterday's close of 59.341. So this is largely brought about by the stronger dollar worldwide recently to new one-month high, especially the dollar yen at 159 levels. It's the highest in 1.5 years. And also oil prices went up to the highest in more than 2 months at around a little over $60 for the NYMEX crude oil benchmark. So this is largely due to external factors. We have seen geopolitical tensions pertaining to, well, for the past 2 weeks, almost 2 weeks, the one for Venezuela and followed by the one with also with Iran. And of course, Trump has been giving signals as well as another factor in the U.S., the risk of independence of the Fed, of the U.S. Central Bank, after charges filed versus Fed Chair Jerome Powell.
Mike, is there any indication of the presence of the Banco Central?
Well, so far, the signals have been consistent that they have been on intervention in recent months and at least for more than 3 years already. So these are familiar levels, Cathy, because the previous record high for more than 3 years was 59.00. That was September 2022 till October 27 of last year. And the previous record high was 59.38 last a week ago, last January 7. And so far, it has been a little over 59, with now at 59.30 to 59.40 range. So it's been fairly stable.
But is that typical, Mike? I mean, at the start of trading, we get a sort of a jump there rather than something that moved at a trend and an intraday high that happens at 10. So it's come a little bit too early, hasn't it?
Yeah, it opened almost 4 centavos higher. So it's considered relatively, well, yeah, it's there's some gap there, a 4 centavo gap. Yeah, but well, it's in reaction largely to the external factors. Well, the local factors, well, the latest data that came out, the year-on-year decline in foreign direct investments, but that's the data is kind of lagged already. That was as of October of last year. So it's really largely due to the external factors, the hedging, of course, some defensive positions due to uncertainties on geopolitics and, even Trump. There are many factors also other than the ones that we mentioned.
All right. We have about 30 seconds, Mike. How does this change your forecasts for the peso to the dollar?
Well, so far it has been fairly stable. It's as long as, intervention is still a factor. There's a good track record into it. But it's a slowly, well, going up. Well, now the dollar peso is at 59,415. So yeah, that's still a large consideration. The any smoothening activities. So it's kind of it manifests in the market from time to time, and that has been the track record. And of course, it's also based on rhetoric on monetary policy.
Okay.
On some hawkish stance also would also help that the BSP is already towards the end of the monetary easing cycle.
And I can see that we're getting a blow-by-blow account there with you staring at the screen. So keep at it, Mike. Thank you so much for the update. We're at 59,415, as Mike said just a few moments ago, but we opened at 59.38. That is an intraday high on the peso against the dollar. Thank you so much, Mike Ricafort, the Chief Economist of RCBC. Now, the Philippines has forged a free trade agreement with the United Arab Emirates, the country's first FTA with a Middle Eastern state. President Marcos witnessed the signing with UAE President Sheikh Mohammed bin Zayed Al Nahyan during his two-day working visit in Abu Dhabi. DTI Secretary Cristina Roque signed the Comprehensive Economic Partnership Agreement, or CEPA, on behalf of the Philippines. Bilateral trade between the two countries reached over $1.8 billion in 2024, and the palace says CEPA will boost Philippine exports to the UAE by nearly 10%. The pact aims to reduce tariffs, enhance market access, increase investment flows, and create new job opportunities for Filipinos in the UAE. It covers multiple sectors from MSMEs and digital trade to sustainable development and intellectual property. CEPA will benefit Philippine exports from bananas and pineapples to electronics and machineries. Mr. Marcos credits the Filipino community in the UAE for making the pact a reality.
Bilang pasasalamat, bilang pagtatanaw ng utang na loob ng UAE sa mga Pilipino, sa inyo, ay sinabi nila, ba't di tayo magkaroon ng agreement? Dahil dyan, marami po tayong pag-uugnay sa UAE, sa trade, sa exchanges, sa people-to-people na pagkikilala. Pagka ng import-export ang UAE at saka ang Pilipinas, ay hindi na natin nilalagyan ng buwis, hindi na natin sinacharge. Parang libre ang pag-exchange.
The Budget Department has lowered its infrastructure spending target after the corruption scandal slowed government outlays in economic growth last year. The target was cut to 4.3% of GDP this year, down from its earlier estimate of 5.1%. Acting Budget Secretary Rolando Toledo says this translates to about 1.3 trillion pesos in infrastructure spending. He also said the adjustment reflects a more cautious spending stance as the government works to restore confidence and streamline disbursements. Infrastructure remains a core pillar of President Marcos's growth strategy. However, spending slowed in 2025 due to budget revisions and project bottlenecks tied to the flood control graft scandal. Toledo said the government remains committed in boosting infrastructure investment over the medium term, stressing the 2026 budget is clean and with no ghost projects and minimal risk of delays. In other news, President Marcos has directed the ICI to continue fulfilling its mandate and remain a fact-finding body. During a press briefing, Palace Press Officer Undersecretary Claire Castro said this is the President's instruction despite rumors that the commission might be dissolved.
Sa ngayon, wala pong anumang panag-uutos pa ang Pangulo, kundi ipagpatuloy pa rin ang kanilang mandato, ipagpatuloy pa rin ang kanilang pag-iimbestiga, at maging fact-finding committee pa rin po sila.
The ICI convened agencies yesterday for its fifth asset recovery meeting. ICI Special Advisor maintained that the remaining members of the commission are forging ahead despite the resignations of Commissioners Rogelio Singson and Rosana Fajardo.
We just have to wait kung ano yung magiging fate ng ICI. So we just continue to do our thing. Gawin lang namin yung trabaho namin. So that pagdating ng bagong commissioners, kung may darating, at least naka-ready na for filing yung mga referral na i-akyat sa...
The Government Service Insurance System, or GSIS, says it is reviewing the Philippine Stock Exchange's proposal to revive stock investment loans and related products for state-run pension funds. GSIS President and General Manager Jose Arnulfo Wick-Veloso said the initiative could widen retirement investment options and help support the local stock market. He stressed, however, that member protection remains the priority. Rather than moving straight to implementation, GSIS is considering a phased study and pilot approach. Under the proposed framework, only licensed and reputable stockbrokers would be accredited to assess member suitability, evaluate risk tolerance, provide investment advice, and handle stock transactions. The plan also sets strict eligibility rules and loan limits based on salary, length of service, and retirement savings, with mandatory disclosures on market risks. The Securities and Exchange Commission has expanded the types of corporate amendments that can be filed through its e-amend portal. Under new guidelines, the SEC widened the coverage of amendments eligible for simple processing, reclassified more complex filings, and imposed penalties for late submission of hard copy documents. The Commission said the changes aim to improve efficiency, reduce red tape, and align with the ease of doing business law. It also warns that late submissions may result in fines or cancellations of applications. The headlines from around the globe. In Switzerland, the World Health Organization is urging countries to increase taxes in sugary drinks and alcoholic beverages. The WHO warns that these beverages have become too affordable due to lower taxes, causing lifestyle diseases such as diabetes, heart problems, and cancer. WHO recommends levies not only sodas but also on fruit juices, sweetened milk drinks, and ready-to-drink coffees and teas. In the U.S., blowback is rising after the Justice Department threatened to indict Federal Reserve Chair Jerome Powell over his congressional testimony about the Fed's renovation project. In a statement on Tuesday, central bankers like Christine Lagarde of Europe, Andrew Bailey of the UK, and Chang Yong-ri of South Korea stood in solidarity with Powell and stressed the need for central banks to be independent. While President Trump's own allies, like Senator Tom Tillis, who chairs the Banking Committee, vow to oppose any Fed nominee until the matter is resolved. As for JP Morgan Chase CEO Jamie Dimon, political interference will cause inflation and rates to go up. And in Iran, the death toll from the anti-government protests has climbed to over 2,000. That's a report from U.S.-based human rights activist news agency. It is the deadliest unrest in Iran since the 1979 Islamic Revolution. Tehran is still mum on the number of casualties, but acknowledges that the protests yielded, quote, a lot of martyrs. The protests began 2 weeks ago over the economy that soon targeted Iran's clerical leaders, particularly Ayatollah Ali Khamenei. And you're watching Money Talks. Coming up, Solar Philippines facing up to 24 billion pesos in penalties. And the country's population is expected to reach almost 124 million in 2035. Keep it here on One News. Money Talks. I'm Cathy Yang. Heading over to the markets. Disappointing earnings report from JP Morgan Chase weighed in on U.S. stocks. The Dow slid by 0.8%. S&P 500 and the Nasdaq fell by 0.1% each. JP Morgan reported a 7% drop in profits for the fourth quarter of 2025, dragged by a $2 billion charge from its deal to take over Apple's credit card program and a dip in investment banking fees. The U.S. 10-year Treasury yields ticked down to 4.17%, and gold prices fell to $4,589 per ounce. U.S. futures are trading near the flat line, with the Dow and the S&P falling by 0.1% and the Nasdaq rising by less than 0.1%. As for Asian markets, it's looking like a mixed bag this Wednesday. Japan's Nikkei 225 reaches record highs over the likelihood of a snap election this February. The Bourse is up by over 1.5%, while South Korea's Kospi is rising by 0.4%, and Australia's ASX 200 falls by less than 0.1%. And a quick check on our own markets here in the Philippines. PSEI opens this Wednesday lower by 0.1% at 6,398. The stock market took a breather yesterday after a three-day rally, ending the session lower by 0.1% on the back of profit-taking as investors await for fresh leads. The broader all-shares index slid by less than 0.1%, with the local counters mostly in the red. Let's take a look again at the Philippine peso. It opened today weaker. That's an intraday high of 59.38 to the dollar. Note that the peso reached an all-time high of 59.355 just about a week ago. So the peso weakened yesterday to 59.341 against the dollar following tariff threats from President Trump and rising political risks in Japan. And as Mike Ricafort of RCBC said, it is because of developments overseas that's caused a weaker open on the peso at intraday. 10-year government bond yields have ticked down to 6.03%. In a related story, the government made a full award of the reissued treasury bonds it offered on Tuesday. High liquidity and bets on the BSP's next move drove total bids to 95 billion pesos, more than triple the amount on offer. The Bureau of Treasury borrowed 30 billion pesos as planned via the reissued 7-year bonds. They were awarded at an average rate of 5.71%. And a look at corporate news now. Solar Philippines is facing up to 24 billion pesos in penalties for failing to deliver nearly 12,000 megawatts of renewable energy over the past 2 years. Energy Secretary Sharon Garin says it has terminated 33 service contracts, accounting for about 64% of all canceled projects for 2024 and 2025. The agency says repeated notices went unanswered. Solar Philippines founder and Batangas representative Leandro Leviste has yet to comment on the matter. Meanwhile, listed Philippine airline companies are expected to post mixed results this year. That's as strong travel demand and route expansion are weighed by high costs and external risks. Analysts say passenger traffic remains solid, but profitability stays tight due to thin margins, peso volatility, as well as rising expenses such as aircraft leases, labor, and airport fees. The International Air Transport Association warns supply chain disruptions, climate risks, and cyber threats could further challenge airlines in the region. And the Philippine Competition Commission has cleared Singapore-based NTT UD Asia to acquire a 40% stake in Cebu Landmasters Luzon unit. The move allows Cebu Landmasters to push ahead with residential and mixed-use projects in Luzon, beginning with developments in Pasig City and southern Luzon. The company has set aside 12 billion pesos for its initial Luzon expansion. Next guest expects continued volatility for both Philippine bonds and equities on the February rate cut expectations. Well, with us now for more is Angie Pasis, the CEO of AIA Investment Management Philippines. It's good seeing you again, Angie. Welcome back to the program.
Happy to be here, Cathy.
All right.
Thank you.
So what do you make of the peso's intraday high there at the open of 59.38 and now at about 59.41 to the dollar?
Okay, so the BSP forecast for the peso dollar rate was really between 58 to 62. And you have a lot of factors pointing to, the upper end of that range being tested. Well, immediate catalyst last night was, inflation coming in and signaling that really the expected rate cuts in the US will happen later and there will be less, right? And since June, the interest rate, the difference between peso interest rates and US interest rates have been narrowing. So that's actually going to favor the dollar. So that's one thing. And of course, long-term driver is really the growth differential, right? While the U.S. economy is showing strong signs of staying strong. We've just downgraded our growth, and we're actually one of the few countries in the region who is downgrading our growth forecast. So that coupled with, let's say, a downgrade in a balance of payments forecast, largely coming from weak sentiment over the corruption scandal. All of those are
Right.
actually going to put pressure on the peso on top
So-
of your current account deficit.
Yeah, I know. We're going the other way when we're compared to the ASEAN. So how low do you think the peso would get before it forces the monetary board to rethink either the pace or the depth of its next easing cycle? As a lot are expecting at least a 25 basis point rate cut next month.
Okay, the primary focus of the BSP is always inflation targeting and, of course, financial stability. So if they do intervene in the FX market, it's not really so much to target certain levels, but to make sure that, the financial sector becomes stable. So I guess they'll just be there to smooth it out, but to really, pin a particular number, I really don't think so. What will prompt them to move? Well, of course, primarily inflation expectations. And we're actually of the camp that, for now, based on what we see, maybe the rate cut in February is actually iffy, simply because, the BSB is already within their target 2 to 4 range. And in fact, core inflation is higher than headline inflation. So what will actually trigger it? If, let's say, growth slows down to the point that, that inflation expectation tilts to the downside. But until then, I think, the US, the BSP will be data dependent.
Right. As journalists, we're actually dependent on what the governor says, because in a span of 5 months, the good governor has communicated in as many ways. The easing window is shutting soon. He reiterated last week, if I could just pull that up, he says we're very close to where we want to be. And then last month, he mentioned that this could be the last cut. And then back in August, he mentioned that the easing cycle is nearing its end. So you're saying that February may be iffy in terms of a rate cut, but how are you interpreting the guidance that he's giving and the actions that have come forth so far?
Okay, so it's really about, again, of course, the governor will be circumspect about what he says, right? Because, everybody follows what he says. But I think if we follow the data, they've always been true to form. It's about managing inflation expectations. And right now, where we are, they're already in their target range. So so that's why I guess he's slowly easing the news that unless there's something there that, points to an inflation, softer inflation that will allow them to continue to cut rates, I think we're pretty much done.
Right. And that poses as a problem when you see an economy that's trending lower. You're expecting sub 5%, not only for the fourth quarter, but also for this year. How much slower do you see the economy growing in the first 2 quarters, at least this year? And the recommendations you have for clients positioning between stocks and bonds?
Okay, so just to correct, 4.6 is fourth quarter. We're looking at 4.9 for the full year 2025. For 2026, we're going by the BSP forecast of 5.4%. A lot of it is also, of course, base effects, right? You're going to come from a very low base. So Yeah, so how are we expecting? So we for the last 2 years, it's been a roller coaster ride for the markets, right? Whether it's a little less for fixed income, but it's been a roller coaster ride. So what is actually saving the day every time the stock market dips? That your valuations are actually very, very low. So essentially, if there's any weakness, you see bargain levels again. We just pick up actually. Right now, our stance is defensive. We're slightly underweight on equities now. We've been using the strength to unload a bit, but we will come back actually. So, sometimes making returns in the stock market is really comparing what you're going to pay and what you expect future prices to be. And when it goes below a certain level,
It's an
when it
art
goes
form.
yes.
And also
But-
determining
but-
the sort of yields. I'm just curious because I know we talked about this last year. Your adventurous fund, the Peso Conservative Fund, and the Peso Balance Fund. How much money did you make for your clients in a very difficult year in 2025?
Okay, so our conservative fund, those are multi-asset funds, but that's the least exposure to equities. We actually generated a full net return of 4.13% for the conservative fund. For the balance fund, which is a mix between, of course, a slightly more tilt to equities, we made 2.13%. And for our adventurous fund, the most exposure to equities, we ended up flat for the year.
All right, well, that's fair enough. People have made money despite all the risks. And I
Yes.
wish you well in 2026, and I'll check back with
Thank
you
you.
on those yields.
Same
Thank
to
so
you,
much.
Cathy.
Angie Pasis of AIA Investment Management Philippines. The Philippine Statistics Authority projects the country's population to reach nearly 124 million by 2035. The PSA said this would add about 14.7 million people to the 2020 population based on an average annual growth rate of 0.85%. Calabarzon is expected to remain the most populous region, followed by Metro Manila and Central Luzon, while the Cordillera Administrative Region is projected to have the smallest population. By 2030, Cavite is seen to remain the most populous province, with Quezon City continuing as the country's largest highly urbanized city. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.